Hi, and welcome to ECCB Connects, a production of the Eastern Caribbean Central Bank designed to share with you who we are, what we do, and how we serve you. Are you interested in growing your wealth? Would you like to learn more about the steps that you can take to create wealth for you and your family? On this episode, Managing Director of the Eastern Caribbean Securities Exchange, Trevor Blake, shares some insights on how investments can be an avenue to wealth creation for you. Stay with us, we'll share more with you after this message.
The Eastern Caribbean Central Bank is rolling out Dcash, the next step in the evolution of the EC dollar. Use Dcash to send and receive money to and from friends and family. Make payments directly from your smart device. Make payments from wherever you are. Download the app from the Google Play or Apple Store and sign up, or visit dcashec.com for more information. The future of the EC dollar is digital. Let's make history together.
Thanks for staying connected. Creating wealth is a topic that sparks the interest of most people, and we're all looking for tips and information on how we can achieve this feat. Is saving the best way to create wealth? What is the difference between saving and investing? Managing Director of the Eastern Caribbean Securities Exchange, Trevor Blake, answers these questions and discusses the options that are available to residents and citizens of the Eastern Caribbean Currency Union for generating wealth.
So the first one we look at is savings, and I don't quite like savings versus investing. I would want to look at it as savings and investing, because it is not a zero sum. It is not one or the next. I think we need to do both. And what we see, it is important for you to have savings even before you start investing. It is from the savings that you would accumulate that you would have the funds necessary to invest. But if you look at the differences between them, see that the savings are more geared towards short-term goals. It's low risk, it's relatively passive, it's safe, and it's aimed towards preserving wealth rather than necessarily growing wealth. Investing, on the other hand, is geared towards long-term goals. It's higher risk, but because of that higher risk, you will get higher returns. You should be actively investing and not merely just sitting on what you necessarily have. And of course, investing is what creates wealth. And we should all be looking to create wealth for ourselves, our families, and the future generations. It is important that we not only save, and most people do have some sort of savings. They have a bank account, maybe a fixed deposit, and things like that, the credit union accounts, etc. And those are important, because it's important that you continue to save, that you practice savings as a discipline, that you put aside a certain portion of your income. And the rule of thumb is, say, 10%. And you put that aside so that and maintain that for the rainy day, for the time when you're perhaps not working and then need to call on your savings to take you through until the next job comes around. As well as for sort of short and intermediate goals. If you want to take a vacation, if you want to buy some particular asset, you save towards those things, and that is important. But if you want to create wealth, you have to get to investing. And I have a graph here that shows the difference between savings and investing. We see, and this graph, while it's from a different market, I think it sort of mirrors what happens in our market pretty good. We see savings account, and the pink section of the graph is the return on savings. So if one is to save 200, and in this particular case it's euros, 200 euros monthly at 2%, and that is the rate we get on our bank accounts in the currency union. So if we were to save at 2%, save $200 a month, you see over 40 years, that will grow to 143,000 euros in this case. However, if you were to invest that $200 a month, and they were able to sort of mirror the S&P index, that same $200 a month will actually grow to $1.3 million over that 40 years. So this is a significant difference. So again, here we are making the case that you need to start to invest if you want to build wealth. So why does investing matter? Well, I just showed if you want to build wealth, the only way to do it is by investing. Nobody has ever saved themselves wealthy. And if you know anybody who has done so, then you could correct me. But not to my certain knowledge, nobody has ever saved themselves rich. You get rich, you build wealth, unless, of course, you inherit some a windfall or if you win the lotto. But you get rich, you get wealthy from investing, not from savings. Of course, you have to save to get to the point where you could invest, but you get wealthy from investing. So that is why it is important to invest. You have to start investing if you want to build wealth for you, your family, and your future generations. Securities are negotiable financial instruments that hold some monetary value. There are two basic features that identify securities. One is that they give certain rights to the owners of these particular assets, and secondly, that they could be traded in financial markets. And we see on the other side the image which shows the different types of investment that you may have: stocks or equities. We have bonds, mutual funds, ETFs, derivatives, hedge funds, etc., etc. These are all financial assets. These are all securities that give rights to the owners of these particular instruments, and they are traded in organized exchanges. So securities are a medium of holding value, of maintaining value, of ensuring that one could invest. They are the medium through which one invests. What are the opportunities then available to us in the ECCU? In the ECCU, really, the only game in town is the ECSE and the markets that it hosts. In the ECCU, we have the Eastern Caribbean Securities Market, which is a market for the trading of all securities. And then we have the Regional Government Securities Market, which is a primary market where governments come to issue securities. And the difference between a primary market and a secondary market is that in a primary market, issuers issue securities for the first time. So new securities are brought to market in the primary market. And then those, once they are issued, those are then traded in the secondary market. So on the ECSM, on the Eastern Caribbean Securities Market, we do also have a primary market platform where companies bring new securities to market. Things like IPOs and APOs are done in the primary market of the ECSM. So this is the only place, essentially, that you could invest in securities that you could be reasonably assured that these are going to be safe, that you will get a positive return, that you could sleep comfortably at night knowing that your securities are pretty safe. I say that because too many times we've seen cases within the currency union, and just a few weeks ago, somebody in Grenada was calling me about a particular investment they had made in a company. But that investment was not made on the ECSE. And they can't hear anything about the investment. They get no return from the investment. However, if the securities are listed on the ECSE, you are reasonably assured that, one, the company will be responsive, two, the company will pay dividends over time, and if the investment is a fixed income, like debt securities, that you will get your return on that investment over the life of the instrument. So on the regional government securities market, we have some 5 governments that issue securities regularly on the market. Every single month, and most weeks of every month, there are auctions of securities, of government securities on the regional government securities market. Again, that is an option for investors, especially those who may be a little less risk averse and don't want to get too risky, but want to get a better return than they would get on a bank deposit. Then they could invest in government securities, government bonds. And these we have maturities ranging from 91 days to over 10 years. So wherever you fall, whatever your needs are, you can get a security that would meet your needs. So you have diversification as well on the regional government securities market, because we have some 5 governments that are issuing regularly. And so you could have geographic diversification, and you could have diversification across maturities, because you could invest in 91-day instrument, 180-day instruments, 365-day instrument, going up along the tenors right up to over 10 years. So anything you need, you could reasonably get on the regional government securities market and on the ECSM. In terms of the companies that are listed on the ECSE, well, in terms of overall listings, we in our market we have some 166 securities listed, most of which are government bonds and treasury bills, etc. And those we have about 150 instruments listed with a value of around $3 billion. We have 12 issues of corporate paper issued by the ECCB, in fact, and that the value of those instruments is something we're in the region of $400 million. And then we have 14 equities listed with a total market cap of about $2.3 billion. So that gives you a sense of the depth of our market. When we look at the equities by sector, we see again, we provide a broad range of sectors that could provide you with significant diversification. We see we have some 6 companies in financial sectors. In terms of sectors in financial services, we have 3 in utilities. We have 2 in the trading sector. We have 1 each in energy, in real estate, and in telecommunications. So again, across the range of product we have, it provides significant opportunities for diversification. And you remember, the reason why you want to diversify is to try to manage that risk that is inherent in investing.
And now for this week's financial tip.
Our financial tip today is about intergenerational wealth. To build intergenerational wealth, start by passing on to your children solid money management skills. Skills like planning, budgeting, saving, and being able to differentiate their needs and their wants. While estate planning may not be easy to think about, we all need to be sure that our assets will be transferred to our loved ones according to our wishes. There are 4 easy ways to transfer your estate: by writing a will, through joint ownership, by gifting your assets before we pass on, or by means of living trust. Remember, it's never too soon to plan for tomorrow.
That's it for this week's episode of ECCB Connects. On today's program, we looked at how investing can be an avenue to wealth creation for you. Here's a look at some of the key points. Savings are low-risk, short-term instruments which are used to preserve wealth. You can use the savings you accumulate to invest with. Investments, while higher risk, are longer duration tools which give a higher rate of return and create wealth. The Eastern Caribbean securities market is one of the avenues residents and citizens of the ECCU can use for investments. For more information about investing on the Eastern Caribbean securities market, visit the ECSC's website at www.ecsconline.com. Thanks for watching, and be sure to join us next week when we bring you another program to share with you who we are, what we do, and how we serve you.